This is probably the most undervalued EV stock in the entire sector. All right, everybody, welcome to the channel. Can you do any better investing? Part of the Can You Do Any Better network. This is an educational channel. We talk about all things investing. If you enjoy our videos, please smash the like button, subscribe to the channel, and ring the bell for notifications. I am Tom. I am not a financial advisor. This is not financial advice. Today, I want to talk to you about an EV stock. The electric vehicles are on fire today. Everything's green. All the EVs are green. So I have an EV stock that I want to talk about that seems to be going under the radar. Everybody's missing this one. So the stock that I'm talking about is Ayro. Stock ticker AYRO. Ayro designs and produces purpose-built electric vehicles, EVs, to enable sustainable fleets of micro-distribution and last-mile delivery. So that's kind of what these are. They're delivery systems. You can see they can also turn this thing into like a food cart type of a situation here. They're branching out into a lot of different areas. Let's look at their stock chart real quick for a minute here, and then we'll get back to this later. So you can see, as we're speaking, they're trading for $4.99. So they're stuck in somewhere around this $5 range. I've drawn a purple line right here that's somewhere around $4.50. You can see that's been very strong support here. It was support again here. It did break below it a little bit here, but support here again, and seems to be supporting it here. So on the flip side, this yellow line is at $6, and this seems to be some short-term resistance. So it hit it here, it hit it again here. So this is about a 90-day window here that it's been stuck between $4.50 and $6. But you can see twice in the past here, and this is not so long ago. In February, this got up over $10, and then in November of last year, it got up over $10. So it is stuck in this range, but it has been in better places. And we're going to go through valuations, and we're going to talk about that. And I'm going to show you why I think this is probably the most undervalued EV stock in the entire sector. So I'm expecting big moves from this stock. Having said that, I'm also expecting that I'm going to need to have some patience on this one. Let's just take a look at their first quarter results for 2021. This will give you a little idea of what this company is doing. So, first quarter 2021 financial highlights. First thing, revenue of $788,869. That's a 437% year over year. That's astronomical. They did lose $5.6 million in the quarter. A lot of that was research and development. They're setting up some new facilities. So here's one. Total cash of $91.5 million. Next line, total debt under $20,000. So you got a company with $91 million. Now this is of March 31st. These guys have $91 million in cash, and they basically have no current liabilities. Under $20,000 in debt. So they have a cash runway that is massive. This is a really important for an EV stock because almost none of these EV companies are making money. They're all losing money with a few notable exceptions, Tesla being one of them. You know, a lot of the EV stocks that are trading right now, there's going to be a lot of dilution to come as they run out of money and they need to do more stock offerings. These guys have $91 million. That's years of runway for them. So they're financially a very strong company. So management says our first quarter 2021 financial performance marks the 6th consecutive quarter of quarter-over-quarter revenue growth. That was from the chief executive officer. All right, the next thing I want to talk about is these guys have set up several different relationships with big businesses. And the relationships are on two ends. They're on the production end and they're on the sales end. So what they're creating for themselves is a global network of potential sales. And on the flip side of that, I want to go through this one partnership that they have in specific with a company called Karma. Karma and Ayro have established a strategic manufacturing, engineering, and design partnership. So what is important about that to me is this company has a market cap of just over $100 million. So they're sitting here with the potential capacity to produce and sell $300 million of vehicles by the year 2023, which is well in excess of the entire market cap of their company. So we're going to go through it, and you're going to see this is way, way out of line with the rest of the whole EV industry. So here we can take a look at their market cap. You'll see now we're at $4.96. So that leaves them with a market cap of $175.259 million. So $175 million. This is the smallest EV company that I could find. So I'm going to just spend some time and compare them. I've done an analysis with a cross-section of several different EV companies that have different specialties. So I kind of touched on everything, and I want to show you what I came up with here. You'll see a list over my shoulder. All amounts are in millions. A lot of these numbers are estimates, projections. So the 2021, that's the year we're in. All these numbers are projected sales, so actual results could vary dramatically. So we've got 2020. Those are actual. Those already happened. And the reason I'm focusing on this is that you will see some of these represent mind-boggling growth rates. So we can't be sure that, for instance, Helion is going to grow 5,767% over the next year and a half. That's possible, but understand, caution. This is not financial advice, and these numbers are estimates. I've highlighted in blue. You'll see the market cap of all these companies. So the first two, Solo and FUV, they manufacture small three-wheel type electric vehicles that are, kind of single user. So these are at the small end of the EV market. And you'll see their market caps they're the two smallest ones. They're about $500 million. Everybody else in the whole industry is anywhere from over $1 billion to Tesla, which is over $600 billion. You'll see the 2020 actual sales for everything other than Li, XPEV, Neo, and Tesla is just in its infancy. Somewhere in the, a $500,000, $2 million, 1.4 million in sales, 20 million in sales, 0 in sales, 0 in sales. So Ayro had $1.6 million in sales in 2021. So that puts them in line with all of these smaller companies. However, their market cap is $176 million. If you look at Helion, they had no sales, and they're a $2.1 billion market cap at $176 million. It's totally out of line with the rest of the entire EV sector. So that's the reason I've focused on it. Now, here you'll see same chart. I've just added a few columns here. Now we go to our 2021 projections and 2022 projections. So again, these numbers are projections. They're not actual numbers. Only time will tell. I don't have a crystal ball. I don't know how much these companies are going to sell this year and next year. So we're going to have to wait and see. But if you look at the average for the analysts, what happens here is all of a sudden the price to sales ratio, well, these guys come a little bit down to reality, 86 times sales. These are still wild numbers. I mean, you got to be a big growth company to have an 86 price to sales ratio. That's massive. Fisker, they still don't have a price to sales because they still don't have any sales. Ayro is trading at 7 times estimated sales for this year. And they're trading at 2 times estimated sales for next year. Nobody trades at those. They had over 400% year-over-year growth. They are expecting 248% growth going forward. This is a high growth company with, for some reason, a price to sales ratio of 2 to 1. All these other companies, all these LLs here are for 2021 and 2022. That means they're projecting a loss and a loss. Ayro is projecting next year to make $1 a share. So think about that. They're trading for $5 a share. If they make $1 a share profit next year, they're trading at a 5 to 1, not sales ratio. They're trading at a 5 to 1 PE ratio next year. Basically, the things that I'm hanging my hat on for this company, and this could be for me, this is a buy and hold, because I don't know when it's going to correct itself. I suspect as each quarter comes out and they continue to report quarter-over-quarter growth and year-over-year growth, an extremely high growth rate, I suspect at some point this is going to have to start to correct itself. And a correction to me would be, just to get back to where it was, is a 2x. It's a $176 million company in an industry where the little companies are $500 million. Almost everything's over $1 billion. So if this got to $1.7 billion, that's a 10x. So not saying it's going to 10x, but it certainly has the potential to 10x. It has the strong potential to 2x, in my opinion. So again, this is not financial advice. This is how I see the numbers. So we've got a company with solid growth, massive production potential. They've created a worldwide sales network. Their balance sheet is super strong. They have $90 million in cash, which represents years of runway before they run out of cash. So you add all these things up together, and I'm putting Ayro as my number one EV stock play. Does that mean it's the best company out of all the companies? These companies are all very different. They all have their strengths and weaknesses, and I'll be doing a lot more videos on EV stocks. Very fascinating sector. I'm saying from an investment standpoint, this is my number one conviction EV stock. I think this has the most upside potential and the least downside potential. So it's hanging out at its lows at strong support. I'm hoping for big things with this stock. Please leave your comments below. Don't forget to smash the like button. Subscribe to the channel if you haven't already. Thanks for watching, and I will see you in the next video.